Have you ever noticed something strange? Almost every finance expert on the internet says the same thing.
Don't let your cash sit idle. Invest everything. Make your money work for you. Sounds reasonable, right? But here's the shocking part. Many billionaires keep enormous amounts of cash.
Not a few $1,000s. Not even a few million. Sometimes hundreds of millions, or even billions, in cash and cash equivalents. So who's right? The experts telling you to invest every dollar? Or the billionaires doing something completely different?
The answer might completely change the way you think about money.
And the biggest reason billionaires hold cash isn't what most people think. We'll get to that in a few minutes. Let's start with a common misconception. Most people think cash is a bad investment. And in one sense, that's true.
Cash usually doesn't generate the same long-term returns as stocks.
Historically, the stock market has outperformed cash over long periods. That's why terms like investing for beginners, best stocks to buy, and stock market investing are searched millions of times every year.
But billionaires don't view cash as an investment. They view it as a tool. And that's a very important distinction. Because the purpose of cash isn't always to grow. Sometimes its purpose is to protect. Sometimes its purpose is to create opportunities. And sometimes it's there simply to give you options when everyone else is stuck. Now imagine this. The stock market suddenly drops 30%. Investors panic. News channels are running non-stop coverage. People who invested every available dollar are watching their portfolios fall. At the same time, someone holding substantial cash has a completely different experience. Instead of panic, they see opportunity. Why? Because cash gives them buying power when others are forced to sell. This is one reason wealthy investors often talk about liquidity. Liquidity means having access to money when you need it. And during market downturns, liquidity becomes incredibly valuable.
In fact, some of the greatest fortunes in history were built during periods of fear and uncertainty.
Not because people predicted the future perfectly,
but because they had cash available when opportunities appeared. Keep that idea in mind because it becomes even more important later. Now let's talk about another reason billionaires keep cash. Risk. Most people focus on returns. The wealthy often focus on survival. That sounds boring, but it's one of the biggest secrets in finance.
Imagine losing 50% of your wealth. To recover, you don't need a 50% gain. You actually need a 100% gain just to get back where you started. That's why many successful investors spend enormous amounts of time thinking about risk management. Cash acts as a financial shock absorber. It doesn't eliminate risk, but it can reduce pressure during uncertain periods. And uncertainty is something financial markets always have. Whether it's inflation, interest rates, a recession, a banking crisis, or geopolitical tensions, nobody knows exactly what comes next. Not even billionaires. Now here's where things get really interesting. Many people assume billionaires keep cash because they're afraid. But often it's the opposite. They're preparing. Think about it. If an incredible investment opportunity suddenly appeared tomorrow, would you have money available? Or would all your money already be tied up? This is where patience becomes a competitive advantage.
Most investors spend their lives searching for great opportunities. But opportunities only matter if you have resources available when they arrive.
That's why some of the world's most successful investors have repeatedly emphasized the importance of cash reserves.
Not because cash is exciting, but because flexibility is powerful.
And now we arrive at the reason most people never consider. Optionality. Optionality is one of the most valuable concepts in investing. It means having choices. Cash creates choices. You can invest. You can wait. You can buy assets during downturns. You can take advantage of opportunities. You can protect yourself during emergencies. You can act quickly when others cannot. In many cases, the value of those choices can exceed the interest earned on the cash itself. And that's a perspective many beginners completely miss. Because they focus only on return. Wealthy investors often focus on return plus flexibility. But before you move all your money into cash, there's something important you need to understand. Holding cash also has costs. Inflation can reduce purchasing power over time. Money sitting idle may miss market gains, and excessive caution can become a problem. That's why billionaires don't typically keep all their wealth in cash. They usually own businesses, stocks, real estate, bonds, private investments, and many other assets. Cash is often just one part of a larger strategy. A tool, not the entire plan. That's a crucial distinction. So what can everyday investors learn from this? The lesson isn't to stop investing. The lesson is to think differently about cash, instead of asking,
how do I invest every dollar? You might ask, how much flexibility do I want?
How much risk can I handle? Would I have cash available if a major opportunity appeared tomorrow? Those questions can lead to much smarter financial decisions. And here's the surprising conclusion. The richest investors in the world don't hold cash because they don't understand investing. They hold cash because they understand investing extremely well. They understand risk. They understand opportunity. They understand patience. And most importantly, they understand that sometimes the ability to act is more valuable than being fully invested all the time. So the next time someone says, invest everything, remember this. Many billionaires don't. And there may be a very good reason why. If you had an extra $10,000 today, would you invest it immediately or keep some cash ready for future opportunities? Let me know in the comments.